Hey, hey guys, it's Brad with WD Gann Tunnel. I am going to go through a bean analysis here. I'm going to do a recording too. This is probably live, but I want to show this to you guys. This will help you guys the reason why I want to do this now is give you a chance to see something before the markets open next after the holidays, and you guys can be realistic about where you're going to move on some of these beans that you haven't sold, or you feel like you're not positioned enough for 2025. Here we go. I'm going to break this out, show you some areas. We're going to move some lines here and see let you guys kind of see the fundamental changes of beans. Guys, this is soybeans continuous contract in front, so you can kind of project too on the as far as what contract you're in, you're going to see the movements on the same pennies, things like that. You might get a little more on the closer contracts, or if it's out in July versus November delivery. But I think these contracts are going to flow pretty close. What I want to show you is this box in here is balanced, and it's balanced off like an 850 bottom, and this goes back into the 2016 bottoms of beans. And so we're basically looking at the same time pattern, and we're looking at that across angle coming down, and the movements were different. We're a little bit different in 2016 because we held tops longer up into here, into January, but still the flow down is staying consistent. And I mean that by the bottoms we're taking on. In other words, I didn't know this at the time, but I kind of did. I didn't want to project too much because you don't want to forecast too heavy. And then when you're wrong, people say, oh my gosh, you got it wrong. But here's one thing I was looking for is this green line is the 2025 angle. And when we fell off here, we picked it up right there, and it bumped. And I didn't know if we were going to catch this angle or not. I was pretty much waiting on it, but it did catch, and so we rhythm back up, okay, here. And so I want you to look at a couple things. Is the days right here are about 67 days. So I'm going to go about 70 days. And then you see here, we hit about 70 days here on the vibration. So, bottom to top, 70 days. So if we think about it right here, if we go about 70 days, we're going to be into March 5th. So it'll probably be the end of February. So the 27th of February, just say February 30th to March 5th. We're going to try to see a low on beans here. And I think we get some contracts coming in at 921 on expiration, or 930s, right there in that 920, 930s. Okay. So that's a good goal to have. The spring solstice happens around 920 here. So I think we get some vibrations here. From what I understand about beans too, is we're probably going to get a deeper bottom into April. So this could fall off a cliff here into $9 right before we slingshot up and get a higher high. So depending on where this bottom comes in around April, I mean, if we would have to get off expiration contracts, and obviously November would be a little higher, but around 16% gets you, or $1.50 gets you back into a 1065 to 1080. So I think we got a shot at that. It's going to be interesting to see how far bean meal goes up in here, how far oil does rhythm up. I mean, bean oil will still be in a lower market, but it's going to rhythm up. So this is going to be interesting, time in here, but I want you to pay attention to something. I'm going to go ahead and do this. I'm going to clone these two on the days, and we know it's a little bit shorter than 70, but I think this slows down the next 70 we get, because eventually we get some deeper bottoms and it goes hunts that bottom. So I don't think this rhythms up right away at the bottom. Eventually it runs out of seasonality and you see it vibrating down here into farther bottom. So we leave this 70-day run here. But I want to show you something is in this area right here, we get a 7.7% increase, and here we are at 7% about off the bottom. So if you think about it, if we get up to 7.8, you guys are going to get 1030s. And let's just look at this here. It's going to be another 10 to 15 cents, okay? And then it's going to run out. So 10 to 15 cents, then it runs out. That's off any contract you're in. Now, I want to show you something here is, let's say you get this run here, and this is about 10 to 11. So let's just put it at 10. So here's 10% right here. Is it 10.50s? That's $1. Okay, so I think you'd be hard stretched to get, and that'd be about, I think 20 cents is hard to get in here. So when you think about 10 to 30 cents, it'd be 30, sorry, here. That gets hard to get to. And the reason is because when you look back into this area, we had some high volume in here. We're running out. This volume was all to the downside. So we had a pretty sharp sling down, and then it hit and ratcheted back up. So we're moving pretty deep off this base here. So let's look at this again. Let's look. I'm gonna do this move here. I'm gonna get a little conservative here because nobody gets the exact top. I'm gonna do around 99 cents off the bottom. So you would get around 10.50s in here. And that's depending on the contract, because you would technically only get about, let me see here. Hang on, I think this moved. I'm gonna go $1, and you would get about 32 cents. So when you think about it, as you're selling this, as you're owning contracts on HTAs, things like that, is you got to think about this something at 10 cents more in this drive. That's quite a bit, because you're not guaranteed the other 20 cents, right? And if you do get to other 20 cents, you're getting into that 10.50, 10.60. Those are huge numbers. And I think you got to really remind yourself is be selling out some of these 10.30s and 10.40s and owning some of that, because when this thing goes down, it goes down fast. You can see that it goes down fast here. So I want to show you guys something is we only had to the top side here 44 days. I don't think we run on that. Only here we get 27 days. Okay, so I want you to think about something is 22 to 25 days is January 13th. So we only got about 10 days left here, okay, in the drive. But you're not guaranteed, you're not even guaranteed the high end here, right? 1060, the 1050. So you really got to concentrate as you come out of this, the market's being closed and stuff is really look at 7 days. Look at 7 to 8 days, as this drive continues. And again, this market closed on the 31st. So this is going to open even faster. So we're, what I mean by that is the days. So it's like, I'm going to go 20. It's the 10th. I mean, it's the 10th to the 12th. So you got to let this market catch up and run. But eventually this thing runs out. You get caught on Fridays. You get it. So it opens Sunday night and it's going to fall apart. So you're going to have trouble chasing this thing into the exact high because you're not going to be trading it Sunday night. And so, I think it's safe to say we know this because you're probably not going to take out this top here, but if you do, there's no more than 30 cents in this drive left, and it gets dangerous. So 10, 15 cents is a lot in the money on this. Take some opportunity. You can work off these numbers into summer. I mean, if you get an 11.25 this summer's fine. We're going to sell more of that. You're going to own the downside of beans. And again, guys, this gets out. Sorry, this gets out. What do I want to say? This gets out into the summer high, out into here. And I don't think this goes past July. So, guys, if you're watching this video before the market's open, pay attention to what's realistic. Another thing is what I want to say is don't get into this. I need 1050 for my beans, and if I don't get exactly 1050, I'm not going to sell anything. Okay, guys, owning 1040s, 1039s, 1038s, or 1050 is not that big of a deal. I mean, whether you own a little bit, whether it's on the board of trade short or to an HTA to the processor. I don't think whether you own it at 1035, 1050s, 1040s is any big deal, because this is what I'm saying. Move something, and then you can move again at 1050 and 1060 if you get it. I mean, if we get bean meal ripping and roaring, right, goes to like 340, it hangs out longer, and I've challenged you guys all this is keep your eye on bean meal. If that thing hangs out at the top, yes, it keeps driving your beans. You're probably going to see 1050, 1055, but not to own something at 1040 and 1035, I think, is a mistake, because you guys know if you get 1060, you have some sold at the 1035s. Think about your averages. If you sold a little bit at 1030, you sold more at 1060s. That still brings you into that 1050. So use a percentage of your total crop. Willing to own some of that. HTA, watch your basis from now until delivery to try to get a good basis on that. So that'll be the second step of what you sell now. What you sell on the board of trade is owning the downside position, okay, on the board of trade. So think about this. If I'm right, and we get down into 920, depending on the contract, if you struck the top of this, you're getting $1.20 short, $1.15 to $1.20. You're probably not going to buy it back at the exact bottom. So we're looking at a dollar here to $1.20 on the downside. We're looking at working off of something for 2025. I know you guys have sold some out up in here at the 1050s, 1060s. If you don't think, because we've seen this 950, don't pay attention. Own some beans outright on an HTA, on a contract. I've talked to a lot of guys, and work in this area to get some more ownership so you're not stuck in a corner at harvest next year at $9 beans, $8.80, or $9.50s. Okay? We can always short the market later in July too and pick up some more. Guys, I want to thank you. I think this is important. Seeing these lines come across here again. Here's the 1056. So if I move this bottom vibration line up here, okay, to this top here, that means you're only going to get 1030. See, that's where the problem with that is the extra 10 to 12 cents. I think you should sell some, because that could be a point of resistance there. If I move up to this line and you capture that, you get into the 1040s and the 1040s, 1038s. I mean, again, 38 versus 40 doesn't matter. Sell some at 1038 on a high through the day into 11 o'clock. Remember this too, guys. The market changes at 10:30, 11. So if it runs in the morning, you get to 10:30, 11, you might want to take some opportunity there, because by the close it runs back and you take on a lower low. So then you have to wait for the night trading to get it springing back up, and a lot of times that doesn't happen. So pay attention to that. Again, we've got that 1040s, 1050s, and a 1030 is a big one. 1030, 10, 12 cents rally here into next week is big. So I hope you watch this. I hope you really look at these swings here. You look at these bottoms, and I hope you think about what you're doing. If you don't sell, I mean, I've talked to guys, sell something, take ownership of something, whether it's the board of trade. Again, if you're into beans going out into July, stuff you need cash delivery March, May, take some opportunity there and get rid of this stuff. You know, these highs have not been higher. So the longer you sat from October 3rd and November 11th, you haven't gained anything unless the basis is short up, which some of you guys saw that, and that's what you worked off of through here. But remind yourself this, that you know, you could do an HTA and babysit basis. Thank you, guys. I appreciate you watching.